Guys, it is FBAR filing season again. So in this video, I will explain what FBAR is, how it is different from IRS Form 8938, who has to file FBAR, the different types of financial foreign accounts that are reportable, and what is not reportable. I will also show how to calculate the maximum value per account, or so-called high water mark in each account, and I will show you where to get the yearly official currency conversion rates to convert foreign currencies into US dollar amounts for FBAR. Then I will actually file my own FBAR for the 2024 calendar year to show you how it is done and to see if anything has changed for this new year. Now, this video is separated into different chapters, so check the description box if you want to skip ahead to certain topics. And to skip right to me filing my actual FBAR, go to the chapter right down here. Now remember, I am not a CPA or tax attorney, and this is not financial, legal, or tax advice. For any kind of questions, consult with a professional if you are unsure about certain parts of your FBAR filing. So, what is FBAR and how is it different from IRS Form 8938? FBAR is reporting of foreign financial accounts to the Financial Crimes Enforcement Network, also known as FinCEN. FBAR has nothing to do with the IRS, and it doesn't care about how much profit, interest, capital gains, dividends, or anything you made in your foreign accounts. That info is for the IRS and goes on your taxes. Now, the IRS Form 8938 also asks for your foreign financial accounts, which is kind of redundant, but that form is attached to your tax filing. And most likely, if you're required to file FBAR, you're probably required to file IRS Form 8938 with your taxes. I also did a video on how to file the IRS Form 8938 and who's required to file. I will have a link to that video in the description below. Now, you are required to file FBAR if you are a U.S. citizen, a U.S. resident, a corporation, a partnership, an LLC, a trust and estate that has foreign financial accounts where the sum of the maximum value of each of these accounts exceeds $10,000 US during the calendar year. So for the 2025 filing, we're concerned with the maximum value of foreign accounts during the 2024 calendar year. I will explain how to calculate this later in the video. So now let's see what is actually considered a foreign financial account. So first, I want people to understand the difference between a foreign financial account and an account in the US in a foreign financial company. So HSBC is a foreign bank in Hong Kong. If you have an account in a Hong Kong branch, that is a foreign financial account. However, HSBC has branches in the US. If you happen to open your account at a HSBC branch in the US, that is not considered a foreign financial account and is not reportable on FBAR. Similarly, Citibank is a US bank. And if your account is in Citibank in the US, it's not a foreign financial account. However, this US company has branches in other countries, like Colombia. If you went to Colombia and opened a Citibank account in Colombia, even though this is an American bank, it's in a foreign country, and therefore that is considered a foreign financial account and is reportable on FBAR. So now that we know the difference, what are the accounts that they're talking about in these foreign financial accounts? So you have bank accounts such as savings, checking accounts, and time deposits. Securities accounts such as stock brokerage accounts, securities derivatives, options, or commodity futures. Insurance policies with a cash value such as whole life insurance policies. Foreign mutual funds or similar pooled funds. Now, a lot of people ask if retirement accounts are included in this. They are not included if they are part of a government retirement plan. So if the plan is kind of like Social Security, where you just get a check from the government, but you don't actually decide where to direct investments, then that is not a reportable account. But if you have a type of like a 401k or a IRA equivalent in another country outside of the US where you put money in and you direct where those investments go, then that is considered a foreign financial account that is reportable on FBAR. So if you don't have control to direct the investments, then it is not a reportable account. And so examples of this are correspondent nostro accounts owned by a government entity, owned by an international financial institution, maintained on a United States military banking facility, held in an individual retirement account that you own or are beneficiary of, held in a retirement plan of which you're a participant or beneficiary, or part of a trust of which you're a beneficiary if a U.S. person files an FBAR reporting these accounts. Now, you don't need to file an FBAR for the calendar year if all your foreign financial accounts are reported on a consolidated FBAR. Consolidated FBAR is used when you have like more than 25 accounts that are put all into one report. Also, you don't have to file if all your foreign financial accounts are jointly owned with your spouse and you completed and signed the FinCEN Form 114A, authorizing your spouse to file on your behalf, and your spouse reports the jointly owned accounts on a timely filed signed FBAR. In other words, if you and your husband have to file FBAR, you can have just one of you fill it out for the two of you, as long as the other person filled out the authorizing Form 114A. And I see a lot of people have questions about this, that income tax filing status, such as married filed jointly and married filed separately, has no effect on your qualifications for this exception. So it doesn't matter how you file your income taxes with the IRS, you can still jointly file the FBAR with you and your spouse as long as they fill out this authorizing form. So now that we know what is considered a foreign financial account, let's see what's not considered a foreign financial account and so does not have to be reported on FBAR. Number one is foreign-owned real estate. So if you have an apartment in Spain or Thailand or wherever, you do not have to report it anywhere on FBAR. Also, if you have a safe deposit box in a bank in another country, or even just one of those safe deposit box companies in another country, it is not reportable on FBAR. And if you happen to have cash, whether in US dollars or foreign currencies, or precious metals like gold, silver bars, coins, anything like that, and they are in that safe deposit box or in your apartment or house in another country, anywhere outside of the country, they are also not reportable to FBAR. Now, a lot of people are wondering about cryptocurrency accounts. Well, they are still not required to be reported on FBAR. However, if you have a foreign crypto account that has crypto and currencies, you may be required to file. So let's say you had Bitcoin in a foreign crypto account and sold it to buy another crypto. If that sale was into a foreign currency, which you immediately turned around and bought another crypto, that still counts as having that money in that account. And so that currency equivalent, if it was over 10,000 US dollars, then it is reportable. So you might want to be on the safe side and add it to FBAR if you are unsure. So this website has a list of some of the foreign-based exchanges. Binance, Bitfinex, Bitstamp, all of these are foreign. And so these are US-based exchanges. And things like Coinbase are US based. Also, if you have something like a Bitcoin ETF that trades on the US stock exchanges, that's not considered a foreign account either. So only if you have accounts in foreign crypto exchanges. Even then, you are not required to file, but you may if you had to change that crypto into a foreign currency even briefly. If that exceeds 10,000 US dollars, you are required to file FBAR for that. So now let's look at how FinCEN wants you to calculate the maximum value in each foreign account, or the so-called high water mark. A lot of people have problems understanding this, so I actually did a visual example of it. Let's check it out. Okay, I'm going to start the high watermark examples from the simplest to more complicated. Assume these are three different accounts. Let's say bank account number 1, bank account number 2, and a brokerage account. And these levels are in US dollars or US dollar equivalent. If it is in a foreign currency, I will show you how to convert that later on, but just assume these are all US dollars. So 2,000, 4,000, 6,000, 8,000, 10,000, and there's the $5,000 level on all of them, right? So for the simplest account, let's just assume there's just one account. It's a bank account. You have some money in there and you just leave it there and it collects a little interest. At the end of the year, you have a little bit more than you started with. So let's say you start the year January 1st, 2024 with somewhere over $5,000, say close to $6,000, and you just leave it alone and you do nothing. And by the end of the year, maybe you have a little bit more interest, right? So by the end of the year, your high water mark is basically the last day of the year, December 31st, 2024, because you started with, say, right under 6,000, and now you have 6,000 with some interest you got from the bank. Very simple, and in this case, you do not need to file FBAR because the sum of the high water marks in all your accounts are not over $10,000. Now, let's start with another example. Same example, you start with, say, $6,000 January 1st, 2024, but sometime during the year, it could be January 1st, January 2nd, June 1st, December 31st, sometime during the calendar year, you take all of this $6,000 and you just move it into this other bank account that was completely empty, right? But now you moved all of that money into there, and this is what is described as the high water mark. In other words, the level that this milk leaves because it was at 6,000 and now it's empty, but that was the residue, the high water mark. Just like in a flood in a house, you know how high the water got by looking at where the watery, muddy kind of line in your house is if it flooded, right? Even though the water went away, it still shows that mark. So according to FinCEN, you have $6,000 in this account all year long, right? Because that's the high water mark. And now you have $6,000 in this account. So now, according to FinCEN, you have over $12,000 in all of your accounts, and therefore you need to file FBAR. So now let's look at another case. You start the year off and you have only 4,000 US dollars in this one account. The other bank account is empty. The brokerage account is empty. But sometime during the year, it could be January 1st, it could be whatever, March 3rd. You take this 4,000 and you dump it into this bank account, right? So you took the 4,000 from here, you put it in here. This is now empty, even though the high water mark, according to FinCEN, is $4,000 in this account. This account, the high water mark, is also $4,000. This account, the high water mark, is 0, right? So far you have 4,000 and 4,000 as your high water mark. The total is 8,000 during the year, so you are not required to file FBAR. But what if you went sometime during the year and now move this into the brokerage account? Okay, so you move the 4,000 from here in this second bank account into the brokerage account. Now, according to FinCEN, your high water mark for the year here is 4,000, here is 4,000, and here is 4,000. So that is 12,000 US dollars, and now you are required to file FBAR, even though you never had more than $10,000 in all your accounts, but just because of the high watermark, you are now considered to have over 10,000 in all your accounts. And so that is how the high watermark works. And if it gets more complicated, let's say you have a bunch of different stocks in this brokerage account and the value goes up and it goes down and it goes up and it goes down. You don't have to watch it and say on Tuesday, January 27th at 4 o'clock, it reached its highest level or something like that. You could just get the monthly statements and say, out of the 12 months, which one had the highest statement, and use that as your high water mark. So I hope everybody understands now the high water mark is the highest level that your account reaches sometime during the year, that even if you emptied it out, it would still leave that milk residue of wherever the highest level was in each account, and that's what FinCEN goes by. And so you add each of them up, and if it's over $10,000, then you are required to file FBAR. Like even in this case, when you only had $4,000 amongst all three of your accounts, you're still liable for filing FBAR. So now that you know the total watermark in each account, how do you convert it into US dollars? If your accounts were all in Singapore dollars, do you have to find out on exactly the day of the year that the Singapore dollars were the highest against US dollars? No. You just use one rate for the whole year, and that rate is supplied by the Bureau of Fiscal Service. I will put a link in the description below to get to that actual page that has all the different currency rates. So let's see how to do that now. So you go to fiscaldata.treasury.gov, click on data search, and scroll down until you see Treasury reporting rates of exchange. And so click on that and scroll down a little bit, and you see it has all the countries and the exchange rate. Now it says record date 12/31/2024 and effective date 12/31/2024. In other words, the last day of 2024. This doesn't mean anything. All this means is that you can use this exchange rate for any time during 2024. So you could use it for the whole year, even though this rate could have gone up and down 5-10%. This is the rate that they use for the whole year. So let's look at Singapore dollars over here. The rate for the whole year of 2024 is 1.363. So it doesn't matter if the high watermark on your accounts, one of them was in February, one was in June, and one was in November. It doesn't matter. You use this exchange rate for all of the accounts. Now let's say you had 20,000 Singapore dollars in one of the accounts as your high watermark. You would divide that by 1.363 and you would come up to 14,673 US dollars, which means you're over the $10,000 threshold, and therefore you have to file FBAR not only for that account that is over the threshold, but for all of your accounts, even if they were zero. As long as one account or the total of all your accounts goes over 10,000 US dollars, you have to file for all of your foreign accounts. Okay, so now we're ready to actually file the 2024 calendar year FBAR. Go to fincen.gov and go down here, click on e-filing and click on this link. Okay, scroll down, click on File FBAR Now as an individual. Now there are two options. You can file the PDF FBAR or the online FBAR. I used to do this when this wasn't an option, and it is very difficult, especially if you don't have the correct PDF reader and all kinds of stuff. I do not recommend this at all. I recommend this. You do not need any special software or Adobe Reader or anything like that. The only problem is that you have to have all your information ready. Your high watermarks, your bank account numbers, the address of your banks, all of that stuff needs to be ready to go, because you cannot leave it and it will time you out if you leave it too long. So have your info ready and do the file online FBAR. So let's prepare and submit. Okay, so you put your email, confirm your email, your first name, last name, and phone number. And you see it says the form does not allow you to save your progress during completion, but after submission, a read-only copy of your FBAR will be available for download. So save that, as well as save the confirmations that they're going to give you to your email address. They're going to get one confirmation that you submitted it and another confirmation that it was accepted. So I take all of those and I screenshot them and put them with the actual PDF and put that away for in case somebody comes back and says I never filed or something like that. So fill that out and then we'll start FBAR. Okay, start FBAR. So put the name of the file that you want them to name the FBAR as. So I put 2024 FBAR and my name after that. And if this report is being filed late, select the reason for filing late. Now, the filing deadline is April 15th, but if you do not meet that deadline, you get an automatic extension to October 15th that you don't even have to file for an extension. So really the deadline is October 15th of 2025 for the 2024 FBAR. But I like to get it in before April 15th so it's out of the way so I can focus on my taxes. Okay, if you scroll down a little bit under that, it says sign the form, remove the signature, submit, which doesn't make a lot of sense because it should be at the bottom of the form when you're finished with everything. So it's a bit confusing, but do not click on any of this yet. So I'll scroll down some more. So it says this report is for calendar year 12/31/2024. It's not amended, so I leave that blank. Prior report BSA identifier, I just leave that blank. Type of filer, individual. So put your social security number or TIN number here, and then it asks what TIN type. So social security number or EIN. So I select social security number. If you don't have a social security number, you would put your foreign ID, passport, or something like that. So then you put your date of birth, your last name, your first name, your address, city, state, zip code, country, region. Now, if you are living outside of the country and you're still required to file FBAR, you can totally put the country you're in. It doesn't have to be a US address. So just put whatever address you're living at. And one thing that's a bit of a pain, remember to select your country first, because if you don't, it doesn't allow you to select a state. So if you select US, now you can select a state. Before you could not. So remember that. Okay, 14A, does the filer have a financial interest in 25 or more financial accounts? Hopefully you answer no, but if yes is checked, do not complete Part 2 or Part 3, but retain records of this information. So if you have more than 25 financial accounts, there is a consolidated report that you can do all of them on, so you don't have to do 25 different entries. And 14B, does the filer have signature authority over but no financial interest in 25 or more financial accounts? I click no. So now we get to Part 2 where you actually fill in the high watermark here, the type of account, whether it's a bank, securities, or other. There's a button for maximum value unknown if the value cannot be determined, but in most cases it can from a monthly statement or something like that. So you put your financial institution name, the account number, the address of the branch where your financial institution is, the city, state, and country, and foreign postal code. And so once you fill all of that in, right, so you say $300,000, let's say, in a bank, and the bank is ABC Bank, right? Account 123456, address 67 Bank Street, city, Singapore, state, same, country, right? Singapore foreign postal code, something like that. So once you do that, if you have more than one account, you click on this and you can add more accounts to part 2. So if you have more than 2, you click on another one and you'll have 3 of them. So fill out how many accounts you have and then let's continue. Now you could just bring up last year's FBAR if you have one and just copy and paste all of the information. The only thing that's usually going to change is the maximum account value. So it would be nice if they had an online account that just pulls your information from the previous year, so that all you have to do is change the maximum account value if it has changed, and everything else usually stays the same mostly. Okay, once you've filled out part 2, part 3 is only for accounts that are jointly owned. So if you own foreign accounts with some business partner or something, or more commonly your husband or wife, you would fill out the information here. So everything is the same except number of joint owners. If you're married, you would put 1 here. And again, if you have more than 1 account, you can click here to add more of them. And the difference from part 2 is it asks for the principal joint owner information. So you would put, let's say you're husband and wife, you're the husband filling this out. You would put your social security number, let's say, your first and last name, your address, and your wife would fill out that form that allows you to file for both of them. And she doesn't have to do anything with that. She doesn't have to send it in or anything. She just has to keep a record of it, I guess. Okay, so if the joint accounts doesn't apply to you, then skip part 3. Part 4 is also something that probably doesn't apply to most people, but it's information on financial accounts when the filer has signature or authority, but no financial interest in the account. All right, so it's the same information on the account and the maximum value and the type of account and where it is. The only difference is the owner information. So this would be if a CPA or tax attorney or somebody is filing these FBARs for you, they would put who they are, where they are, and their title. Okay, next section, part 5, information on financial accounts, where a filer is filing a consolidated report. Again, this usually doesn't apply to most people. This is if you're filing more than 25 financial accounts, you can file a consolidated report. So as an individual or a married couple or whatever, you're probably going to skip this unless this applies to you. Okay, now we get to the signature part. So it says check here if report is completed by a third-party preparer and complete the third-party preparer section. So if a CPA or attorney is doing this for you, you would check here. Otherwise, you would leave it alone. And so filer signature, this adds your signature when you go back up top to those sign buttons that you saw in the beginning, and the date gets populated once you sign it up there. So it's really convoluted how they do this. These buttons should be here at the bottom so you could see that as you sign it, it gets filled in. But anyway, we'll do that in a second. And then this section, third-party preparer use only. So your CPA or lawyer's name, whatever. And so most people are not using this section. So that's really it. Now let's go back up to the part where we click on the button to sign this report. So scroll all the way back to the top, right? So here we are back to sign the form, remove signature, and submit. So basically you sign the form. If you want to, I don't know, change something, you might need to remove the signature. Usually you don't. So everything is right. I'm going to sign the form. And then I'm going to go down to the bottom and check that they put a signature on there, that it's signed, and the date. And then I'm going to come back up here and submit, and that will be done. So let's do that. Sign the form. Okay, I acknowledge that I'm electronically signing the BSA report. Hit OK. Now, it doesn't do anything. It doesn't tell you anything, right? So let's scroll all the way to the bottom to see that those fields got filled in. And so you see, it says filer signature, form is signed, date of signature 2/4/2025. So that means it is signed. And now I could go back up and click submit. So I'm back up here and I'm going to click submit. Okay, confirmation. We have received your submission. Click below to download a copy of your FBAR. So definitely click this and save it and put it in your archives or whatever on a hard drive, make copies, electronic copies and all of that, and just put it away. And that's what I do. So not only do I save a copy of the FBAR, I also take a screenshot of this. So it shows the tracking ID, the date it was received and all of that. So that's the second piece of evidence. And then when I get a confirmation email that it was accepted, I also screenshot that and put it all into my files. So guys, I hope you now know all the ins and outs of filing your own FBAR. You can save some money with your accountant, but that's not why I do it. I like to do it to make sure all the numbers and the accounts and the high water marks and the conversions are correct, because there are some big fines if you don't file it, or maybe it's wrong, or you leave something out. So I like the peace of mind of knowing that I did it correctly. And once you do it once or twice, you get the hang of it, and you could always use last year's return to look at it just to make sure you filled in all the right fields. It's not that hard. Hope you like this one, guys. I'll see you in the next one. Thanks for watching.